Welcome back to part 3 of economics for first year BA LLB. Most important question answers. These questions have been taken from the past exam papers of Mumbai University. Let's begin with the first question of part 3. So in this video, we'll learn about micro and macroeconomics. Microeconomics and macroeconomics are two main branches of economics. Micro means small individual units, macro means large aggregate units. So the two main branches of economics, but they differ in terms of their focus, their scope, and the issues they address. Here is a clear distinction between the two. Let's look at the definition. Microeconomics focuses on the behavior of individual economic units. All right. Individual units. Okay. And such as households, firms, and industries. It studies how these units make decisions regarding resource allocation, production, and consumption. So these three is very important. So it studies how these units make decisions regarding what studies? Microeconomic studies these units, that is households, firms, and industries, and on how they make decisions regarding allocating resources, producing, and consumption, that is production and consumption. Whereas macroeconomics definition, if you have to give, what is macroeconomics? Macroeconomics focuses on the economy as a whole. So we'll use the same word as above. Focuses on the economy or on the behavior of the economy as a whole. Analyzing aggregate indicators, that is total indicators, complete indicators like national income, overall employment or unemployment for that matter, inflation and GDP, and government fiscal and monetary policies. So it looks at all of these things in aggregate, in total. This was the definition of micro and macroeconomics. Scope. Microeconomic examines specific markets and individual decision makers. We already mentioned earlier that it focuses on the behavior of individual economic units. So its focus is on specific markets and individual decision makers. It looks at supply and demand for particular goods and services, pricing strategies, competition, consumer behavior. Whereas macroeconomics looks at broad economy-wide phenomena, including national income, inflation, unemployment, economic growth, fiscal policy. It's repeated again, almost like the above one. Its scope, where it is applicable, that's the scope. Definition is that it deals with whole aggregate units like indicators like national income, unemployment, inflation, GDP, government fiscal and monetary policies. Let's look at its focus. Microeconomics studies the supply and demand for goods and services. It's the same thing but it's said in a different way. Price determination, consumer choice, labor markets, business production decisions. It explores how individual agents like consumers or firms respond to changes in market conditions. Macroeconomics, on the other hand, studies aggregate variables such as overall GDP, total national output, unemployment rates, inflation, monetary and fiscal policies of the government. It analyzes how entire economies function and how policies impact economic performance at the national or global level. Key variables. Microeconomics focuses on specific variables like individual prices, quantities of goods and services, individual income, and consumer preferences. It is just the other way of saying the same thing over and over again. This is just to expand the answers basically. Macroeconomics, it deals with aggregate variables like national income, overall employment, inflation rates, interest rates, economic growth. Decision makers. Who are the decision makers in microeconomics? Those are individual consumers, individual individuals, businesses, and governments are the decision makers in microeconomics. In macroeconomics, it is government, central bank, they are the decision makers because they look at the economy as a whole. It looks at how policies affect aggregate economic performance and economy's overall functioning. Okay, let's look at few of the examples of microeconomics. Consumer demand and price elasticity or demand elasticity. Firm pricing strategies, that is pricing strategies of the firms and market competition, labor market dynamics and wage determination, production cost and market structures, perfect competition, imperfect competition, monopoly, monopolistic competition, oligopoly. Whereas macroeconomics example includes national income and GDP growth, unemployment and inflation, fiscal policy, government spending and taxation, monetary policy of the central bank actions, or money supply and interest rates. What are the objectives of microeconomics? It seeks to understand how individual entities maximize utility or profit under conditions of scarcity. This is the microeconomics. And macroeconomics aims or seeks to understand how entire economies grow, experience recessions, or manage inflation, and seek to develop policies to stabilize or stimulate national economies. How does it do? How does the microeconomics methodology works? It is focused on specific market models such as demand supply curves, cost structures, and individual market equilibria. Whereas macroeconomics involves aggregate models like aggregate demand and supply curves, uh, investment saving, liquidity preference, money supply models, and the Phillips curve. Look at interdependence. Microeconomics deals with individual behaviors but can be impacted by the macroeconomic factors like inflation, interest rates, and government policies. Whereas macroeconomics, although a broader view that includes individual behaviors like aggregate consumption, but also looks at how such behaviors collectively influence the economy at a national or global level. So both are interdependent also. Microeconomics influences the overall aggregate indicators of the economy and overall aggregate economies of the country affects individual behaviors also. Let's look at few of the examples again. Microeconomics, a business owner deciding whether to raise the price of their product based on changes in the cost of raw materials and the demand from consumers. Whereas macroeconomics scenario includes the government implementing a stimulus package to address economic recession, aiming to increase national output, that is GDP, and reduce unemployment. Let's look at the summary of the differences. Microeconomics deals with or focuses on individual markets and decision makers, whereas macroeconomic focuses on economy wide variables and national performance. Microeconomic scope is narrower, which includes specific goods and services, firms, etc. Macroeconomic scope is broader. It looks at national income, inflation, unemployment, GDP, government fiscal policies. The key variables of microeconomics includes prices, quantities, wages, consumer behavior, whereas the key variables of macroeconomics are national income, inflation, unemployment, GDP. Decision makers in microeconomics include consumers, firms, and workers, whereas in macroeconomics, the decision makers are governments, central banks, economy wide decisions. Few examples of microeconomics include supply demand in specific markets, whereas for macroeconomics, it is national fiscal policy, monetary policy, etc. The objective of microeconomics is utility maximization, and profit maximization. Whereas for macroeconomics, it is economic stability, growth, and inflation control. In conclusion, microeconomic focuses on small scale economic activities of individuals and firms, while macroeconomic examines the big picture of the economy as a whole. Alright, let's begin with the next question. Explain the characteristics of labor. Labor is one of the key factors of production in economics, alongside land, capital, and entrepreneurship. It refers to the human effort, both physical and mental, used in the production of goods and services. The characteristics of labor are important in understanding how labor market functions. The factors influencing wages, how labor contributes to economic growth. Let's look at the key characteristics of labor. If the question comes for 2 marks, then we just have to write 2 points. If it comes for 4 marks, we write 4 points, and so on. Heterogeneity. Labor is heterogeneous in nature. What it means is, meaning it varies from one person to another person. This variation is based on skills, education, experience, abilities, and preferences. Different individuals bring different types of labor to the market, from manual labor to specialized technical or intellectual work. Example, a highly skilled surgeon provides a different type of labor compared to a factory worker. Mobility. Labor is mobile but to a varying degrees. It can be geographically mobile, that is migrating from one region or country to another, or occupationally mobile, shifting from one industry or job type to another. However, the mobility of labor can be influenced by factors like education, training, family ties, legal restrictions, and economic conditions. Example, a worker might move from one city to another for a better job opportunity or switch from working in agriculture to the technology sector. Perishable. Labor is perishable, meaning it cannot be stored or saved for later use. A worker's time is consumed when they are working, and it is not something that can be stockpiled. Example, if a worker misses a day's work, that time cannot be recovered, leading to a loss of productivity. Individual effort. Labor represents individual effort, but it is often coordinated within a team or organization to achieve a common goal. Each worker contributes according to their ability, and the overall output depends on the combined efforts of all workers. Example, in a manufacturing plant, each worker performs specific tasks, but the final product is the result of collective labor. Okay. Limited supply. Labor is limited in supply because the total available workforce is constrained by population size, age distribution, and the willingness of the individuals to work. Labor supply is also affected by societal norms, cultural attitudes, and government policies. For example, in a country with an aging population, the labor supply may be shrinking as fewer young people enter the workforce. Wages and compensation. The remuneration or wages for labor vary based on the type of work, skill level, demand for that type of labor, and prevailing market conditions. Wages are the price paid for labor and are influenced by factors like supply and demand, union negotiations, education, and experience. For example, a software engineer might earn higher wages than an unskilled laborer due to the specialized nature of the job. Human capital. Labor is often linked to human capital, which refers to the skills, education, and experience that workers possess. Human capital enhances a worker's productivity and value in the labor market. A person with master's degree in engineering has more human capital and can command higher wages compared to someone with only a high school diploma. I'm not explaining this in Hindi or further trying to explain or elaborate on what it says because it's self explanatory. Where required, I'll expand on that. Productivity. The productivity of labor refers to the amount of output that a worker can produce within a given period. Labor productivity is influenced by factors such as skills, education, health, and the availability of technology or capital. Example: a worker in factory equipped with advanced machinery may produce more units of output per hour compared to a worker in a factory with outdated tools. Now, in exam, whatever points we can remember about labor, we can expand on that. Otherwise, what I'm showing here are many points on labor, but not necessarily we have to write everything. We can even write 4 5 points just to get good amount of marks in the exams. Intangible and subjective. Here, what I'm trying to show is how to expand on any particular point or topic that may come up in the exams. Labor is often considered intangible because it cannot be physically touched or stored. Moreover, the value of labor is somewhat subjective, varying based on societal preferences, cultural norms, and economic conditions. Example: a teacher's labor is not physical, but the value of their work depends on how society values education. This is what intangible and subjective means. Labor unions and collective bargaining. Labor is often organized through labor unions, which represent workers' interests in negotiations with employers. Collective bargaining allows workers to negotiate for better wages, working conditions, and benefits. Example: a trade union in the automobile industry may negotiate with car manufacturers to improve safety standards and wages for workers. Skill and specialization. Labor varies in terms of skills and specializations. Some workers perform highly specialized tasks requiring advanced training and education, example doctors and engineers, while others perform more general or routine tasks, examples manual laborers. A construction worker may have specialized skills in carpentry, while another may specialize in electrical work. Both contribute to the same project but in different ways. Economic contribution. The contribution of labor to the economy is substantial. Labor is essential for the production of goods and services that drive economic growth. The supply and demand for labor determines wages and employment levels, impacting the overall health of the economy. Example: a growing economy with increasing demand for services like healthcare or technology requires a corresponding increase in the labor force with the appropriate skills. Now let us summarize all these points. Heterogeneity means labor differs in skills, education, experience, and abilities. Mobility means labor is geographically and occupationally mobile, but mobility is influenced by various factors. Perishable. Labor cannot be stored or saved for later use, it's consumed in real time. Individual effort. Labor is individual but often part of collective effort in production. Limited supply. The supply of labor is constrained by population, size, age, and willingness to work. Wages and compensation. Wages are determined by skill, demand, and other market factors. Human capital. Labor's productivity is enhanced by education, training, and experience. Productivity. The efficiency of labor, influenced by technology and skill, determines the output level. What is the productivity? Intangible and subjective. Labor is non-physical and its value is influenced by societal factors. For example, teachers' labor cannot be is not physical, but it cannot be touched, it cannot be seen, but it is there. The labor is there. Labor unions. Labor unions organize workers into unions to negotiate for better wages and working conditions. Skill and specialization. Labor varies in skill from routine tasks to highly specialized work. Economic contribution. Labor is critical driver of economic growth, affecting wages, employment, and productivity. In summary, labor is unique and dynamic factor of production with varied characteristics. These characteristics influence how labor markets function and determine wages, employment patterns, and overall economic output. Understanding these traits helps policymakers, businesses, and workers navigate labor related challenges and opportunities. Next, let's look at the causes of increasing birth rate in India. The birth rate refers to the number of live births per 1000 people in a given population during a specific period. This is the definition of birth rate. That is, live birth per 1000 people in the given population. An increase in the birth rate can be influenced by a combination of social, economic, cultural, and environmental factors. Here are some of the primary causes of an increasing birth rate. First is improved healthcare and medical advancements. Better healthcare and medical facilities lead to a reduction in maternal and infant mortality rates, means death rates, mother's death and the baby's death is reduced due to better healthcare facilities, encouraging families to have more children. With fewer risks associated with childbirth, people may feel more confident in having larger families. Examples: access to prenatal care, vaccinations, and improved hospital facilities lowers the likelihood of infant death, thus increasing the birth rate. Cultural and religious beliefs. In many cultures, there is a strong emphasis on having larger families. Religious or cultural beliefs may encourage procreation and view children as a blessing, leading to higher birth rates. In some societies, traditional beliefs or religious teachings encourage large families, considering it a moral or religious duty to have more children. Lack of family planning. In regions where family planning services are limited or inaccessible, there is often a higher birth rate. People may not have access to contraceptions or the knowledge to control family size effectively. Example: in rural or underdeveloped areas, women may lack access to birth control methods, leading to more unintended pregnancies and larger families. Economic factors. In agricultural societies, children are often seen as an economic asset because they can contribute to work on farms or in family owned businesses. This practical need for children can lead to higher birth rates. In rural areas where farming is prevalent, children are often considered a source of labor, and families may have more children to help with the work. Low female education and employment. Women with lower levels of education and limited access to workforce are more likely to marry earlier and have more children. In societies where gender roles are more traditional, women may have fewer opportunities for education and employment, which results in higher fertility rates. In some developing countries, young women are married early, and due to limited educational or career opportunities, they have children at a young age and tend to have larger families. Sixth, government policies. Certain government policies may either directly or indirectly encourage an increase in the birth rate. For example, governments may offer financial incentives, tax breaks, or subsidies for families with multiple children to encourage higher fertility. Some governments may offer some governments offer child allowances or free healthcare for children as a way to reduce the economic burden of having children and promote larger families. I'm not sure which country does this. Social and peer pressure. In certain societies, there may be significant social pressure to have many children. Families or individuals might be influenced by societal norms or peer expectations, resulting in higher birth rates. In some communities, it is viewed as a social expectation or status symbol to have many children, especially in traditional or collectivist societies. Young population. Countries or regions with a younger population tend to have higher birth rates, as younger individuals are more likely to be in their reproductive years and have children. The age structure of a population can directly influence the overall birth rate. Many African countries have a youthful population where a significant proportion of the population is under the age of 30, which often leads to higher fertility rates. This is also applicable to India. India also has a very young population and has the highest population in the world. Improved social security and welfare system. In some countries, especially in rural or less economically developed areas, families may have more children because they believe that they need more children to provide financial support in old age. A lack of adequate social security systems may increase the reliance on children as a source of care and support in later life. In areas where public pension systems are weak or non existent, families may have more children as a form of long term security as they rely on children for support in old age. Early marriage. In many societies, early marriage leads to higher fertility rates as individuals begin having children soon after marriage. Early marriage is often more prevalent in regions with traditional customs where it is culturally or legally accepted. In certain parts of South Asia or Africa, early marriage and childbearing are common, leading to higher birth rates. In fact, even in India, in most of the villages, especially rural areas, the girls are married off even at the age of 16, even today also, and that's a fact. It is not openly accepted, but that's a fact. Migration. Migration patterns can also influence birth rates. In countries or regions with high levels of immigration, particularly from areas with higher fertility rates, the overall birth rate may increase. Example, immigration populations from countries with high birth rates may bring cultural practices and reproductive behaviors that contribute to higher fertility rates in the receiving country. Psychological factors. Some people may desire to have large families due to personal or psychological reasons, such as the wish to experience parenthood multiple times or the belief that more children lead to a richer family life. A family may choose to have more children based on personal happiness or a desire to ensure siblings for each child, even without economic or cultural pressure. Now let's summarize all the causes of increasing birth rates. Improved healthcare, reduced maternal and infant mortality, encouraging more children. Cultural and religious beliefs. Cultural or religious teachings may encourage large families. Lack of family planning, limited access to contraceptives leading to unplanned pregnancies and large families. Economic factors, children seen as economic assets, especially in agricultural societies. Low female education and employment, less access to education and employment opportunities for women leading to higher birth rates. Government policies giving incentives or subsidies to encourage having more children. Social and peer pressure, societal expectations and norms promoting large families. Young population, a large proportion of the population is in the reproductive age group, leading to more birth rates. Improved social security. Lack of social security leads to families to rely on children for support in old age. Early marriage. Early marriage leads to earlier childbearing and larger families. Migration. Immigration from regions with higher fertility rates leads to an increase in birth rates. Psychological factors. Personal desires for larger families or the belief in the value of many children. So, in conclusion, an increase in the birth rate is typically caused by a mix of social, economic, cultural, and policy related factors, with each factor playing a role in influencing family size decisions. Addressing these issues requires a multifaceted approach including improving access to healthcare, education, family planning, and addressing economic and social factors that drive high fertility. Next, let's look at different types of tax rates in India. Okay, let's start with different type of tax rates in India. In India, tax rates vary depending on the type of tax, the taxpayer, the income, or the transaction involved. Generally, tax rates can be categorized into different types based on income tax, GST, goods and service tax, and corporate tax, among others. Okay, let's go with the first one, progressive tax rates. What does it mean? A progressive tax rate means that the rate of taxation increases as the income of the taxpayer increases. This is known as progressive tax rate. This has come in the exam separately also. Uh, Explain what is progressive tax rate, or short note on progressive tax rate. This has also come. So individually also we are going to go through them, and collectively also. So we are covering many questions in one question. So in progressive tax rate, the taxation increases as the income of the taxpayer increases. In India, income tax is progressive with different tax slabs depending on the level of the income. For example, income tax slabs for individuals, for income up to 2.5 lakh, there is no tax. From 2.5 lakh to 5 lakh, it's 5%. From 5 lakh to 10 lakh, it is 20%, and above 10 lakhs, it is 30%. Now, this is just for illustrative purposes. I think now the initial no tax income is from 5 to 7 lakhs rupees, and above 10 lakhs is some 30%, which this one may be correct, but this has changed. From, I think, from 7 lakhs to 10 lakhs is 20%. So, but just for illustration purpose, which we can give in the exam. Additionally, rebates and deductions can lower taxable income, and the tax rate may differ depending on age. That is, senior citizens have, or super senior citizen may have different tax slabs or different slabs of paying tax. So this is known as progressive tax rate. Now let's go on to proportional tax rate, flat rate. A proportional tax rate, also known as flat tax, is a tax rate that applies uniformly to all taxpayers regardless of their income. The tax rate is constant, meaning everyone is taxed at the same rate irrespective of the income level. For example, GST, goods and service tax system in India, has a flat rate on certain goods and services, although there are different rates based on category of goods and services. GST rates include 0%, that is no tax, 5%, 12%, 18%, and 28%. For example, basic necessities like food items may be taxed from 0 to 5%, while luxury goods may be taxed at 28%. Many of the taxes are at 18% also, like computer items and electronic items and all of that. Third is regressive tax rate. A regressive tax rate means that as the income of the taxpayer increases, the rate of taxation decreases. This is regressive. This is opposite of the progressive tax rate. However, regressive taxes are less common in India as the tax system is generally progressive. An example of a regressive tax in India could be excise duties on certain goods, where a uniform rate is applied regardless of income levels. Marginal tax rate. This has also come separately in the question papers. The marginal tax rate is the tax rate applied to the last rupee of the income that is earned. It reflects the rate at which the next unit of income will be taxed. For example, if an individual's income exceeds rupees 10 lakh, the marginal tax rate on the income above 10 lakh is 30%, meaning every additional rupee earned above 10 lakh rupee will be taxed at 30%. So, for example, let's say up till 5 lakhs, the tax rate is say 5%. So anything above 5 lakhs, that is 5 lakhs 1 rupee, 5 lakh 1 rupee, and above till say 7 lakhs will be taxed at 10%. So only from 5 lakhs to up till 5 lakhs say 5%, okay, and above 5 lakhs to 7 lakhs 10%. So this slab, this money will be taxed at 10%. So that is known as marginal tax rate. Effective tax rate. The effective tax rate is the average rate of tax that a person or business pays on their total income. It is calculated by dividing the total tax liability by the total income. Example, if an individual earns 12 lakh rupees and pays 2 lakhs in tax, the effective tax rate is 16.67%. Let's go through this again. The effective tax rate is the average rate of tax that a person or business pays on their total income. It is calculated by dividing the total tax liability by the total income. For example, if an individual earns 12 lakhs and pays 2 lakhs in taxes, the effective tax rate is 16.67%. This I'll have to understand again. Corporate tax rate. Corporate tax rates are applied to profits earned by companies in India. The tax rate for domestic companies depends on the turnover, type of company, and whether it opts for new tax regime. So we have old tax regime and new tax regime. For domestic companies, as of 24-25, if the turnover is up to 400 crores, the tax rate is flat 25%, and anything above 400 crores, the tax rate is 30%. For foreign companies, the tax rate is generally 40%, but it may vary based on specific treaties or agreements. Companies opting for new tax regime under Section 115BAA can benefit from a lower corporate tax rate at 22%. That is, they cannot claim any exemptions or deductions. Next, wealth tax rate. Wealth tax is a tax levied on the net wealth of an individual. Hindu undivided family HUF or company. The wealth tax was abolished in India in 2015, but it was previously charged on the value of assets such as property, cash, jewelry, and more. The wealth tax rate was 1% on net wealth exceeding 30 lakhs. Capital gain tax rate. Capital gain tax is levied on the profits made from the sale of assets or investments such as property, stocks, bonds, or mutual funds. There are two types of capital gain tax. Short-term capital gain tax (STCG) applied if the asset is sold within 36 months for properties, okay, and within 12 months for stocks. STCG on listed securities is 15%. So if you're buying a company share, a share of a company and selling it within 1 year, then you'll need to pay 15% as short-term capital gain tax. And for long-term capital gain tax, applied if the asset is held for a longer period, that is more than 1 year, LTCG on listed shares is taxed at 10% if the gain exceeds 1 lakh rupees in a year. That is, my profit should be more than 1 lakh rupees or my gain should be more than 1 lakh rupee, and on that I have to pay 10%, only on above 1 lakh rupees. TDS, tax deducted at source. TDS is a means of collecting income tax in India. The person making the payment, understand that the person who is making the payment deducts the tax at the source before giving the money and remits it to the government. So for example, if I have to pay you 1 lakh rupee, so I will not pay you 1 lakh rupee. I will first deduct the tax whatever is applicable as TDS and then pay you the balance only. So for example, if it is 1%, I have to deduct 1% of 1 lakh. So I will deduct 1000 and I will pay you 99,000 and 1% I will directly deposit to the government as TDS. The common TDS rates include salary, the TDS is based on the income slab. Rent, if you are earning any rent, then 10% for rent exceeding 2.4 lakh per annum. So whatever amount exceeds 2.4 lakh per annum, on that only 10% has to be paid as TDS. Professional fees, 10% on fees paid exceeding 30,000 rupees. Interest from bank, bank will deduct 10% on interest exceeding 40,000 for individuals or 50,000 for senior citizens. So these are the common TDS rates. Let's look at GST tax rates. GST is a consumption tax levied on sale of goods and services in India. It has multiple rates based on the type of goods or services. Let's look at the different tax slabs. 0% for essential items like food grains, etc. 5% for essential goods and services like textiles, footwear, etc. 12% for items like processed foods, etc. 18% for items like consumer electronics and etc. And 28% for luxury goods, including automobiles and high-end electronics. Now let's summarize the whole thing. Income tax. It is a progressive tax rate, charging 5%, 20%, 10%, 20%, and 30% based on income slabs. Corporate tax is taxed at either 25% or 30% for domestic companies, and even 22% if it goes for a new tax regime, and 40% for foreign. It is for companies. GST tax slabs are 0%, 5%, 12, 18, and 28%. It is based on the type of goods and services. Capital gain tax is charged for short term 15% and for long term 10%. Example is based on holding period of the assets. That is for 1 year, less than 1 year, and more than 1 year. TDS is 1% to 30% based on the type of income. So 10% for rental income, on fixed deposit 10%, and so on. Wealth tax. It is abolished. Previously it was 1% of the wealth. It was charged on the net wealth exceeding 30 lakh rupees before 2015. India's tax system is multifaceted and tax rates vary across different categories and individuals. There are exemptions, deductions, and rebates available that can reduce the effective tax burden. The government regularly updates the tax rates, and taxpayers must stay informed about the latest changes in tax policies. Next, let's check the functions of WTO. This is also very likely to come in the exam paper. The World Trade Organization is an international organization that regulates international trade. Its main goal is to facilitate smooth and predictable trade flows between countries by establishing rules, resolving disputes, and providing a platform for negotiations. The World Trade Organization replaced the General Agreement on Tariffs and Trades (GATT) in 1995 and has since played a key role in shaping global trade policies. Key functions of the WTO. They can ask us just a short note on the functions of WTO, and we can write a few points on them. There are many points, almost 10 points. We'll cover one at a time. What does it do? So if we were working in a World Trade Organization, how would we look at it? So facilitating trade negotiations. One of the main functions of the WTO is to provide a platform for member countries to negotiate trade agreements. World Trade Organization holds rounds of negotiations aimed at reducing trade barriers such as tariffs, subsidies, and other restrictions. For example, the Doha Development Round, launched in 2001, was one such round of negotiations focused on addressing trade issues of developing countries. So the first is to facilitate trade negotiations. Administrating trade agreements. The WTO administers and ensures compliance with a wide range of trade agreements negotiated among its members. These agreements cover various aspects of international trade, such as trade in goods, services, and intellectual property. Example, the agreement on trade related aspects of intellectual property rights and general agreement on tariffs and trade are key agreements under WTO. So first, it facilitates trade negotiations, then it administers trade agreements. Third is dispute settlement mechanism. The World Trade Organization provides a dispute settlement mechanism that helps resolve trade related conflicts between member countries. When one country feels that another is violating WTO agreements, it can bring the issue before the WTO's dispute settlement body. This helps to prevent trade wars and ensures that countries follow agreed upon rules. Example, if one country imposes unfair tariffs on another, the affected country can file a complaint with the WTO, which will then investigate and provide a ruling. Fourth is monitoring and reviewing trade policies. WTO monitors the trade policies of its member countries through the Trade Policy Review Mechanism. This process helps ensure that trade policies are transparent and that member countries are adhering to their WTO commitments. Example, WTO reviews the trade policies of major economies such as the United States, China, and India to ensure that their policies align with WTO principles and do not restrict free trade. So let's revise all four. Facilitating trade negotiations, administrating trade agreements, dispute settlement mechanism, monitoring and reviewing trade policies. Now let's look at the next fifth one. Providing technical assistance and capacity building. WTO helps developing and least developed countries by providing technical assistance and capacity building programs. These programs help countries better understand WTO agreements and implement them effectively. They also provide training to government officials and policymakers to improve their trade related skills. Example, WTO offers courses and seminars to help developing countries understand complex trade rules, manage trade policies, and improve negotiations. Sixth, promoting fair trade and reducing barriers. WTO seeks to promote fair trade by reducing unfair barriers like tariffs, quotas, and subsidies that distort trade. It aims to create a level playing field for all countries, ensuring that trade flows more freely, effectively, efficiently, and fairly. Example, by reducing tariffs through negotiations, countries can access a wider variety of goods at a competitive prices, thus benefiting consumers. Regulating trade in services. The WTO's General Agreement on Trade in Services (GATS) deals with the liberalization and regulation of services. It allows countries to negotiate the opening of the services markets such as banking, telecommunications, transport, and tourism. Example, through GATS, countries can make commitments to open up sectors of their economy such as financial services to international competition. Eighth, promoting sustainable development and environmental protection. WTO recognizes the importance of balancing trade and environmental protection. It aims to support the sustainable development of global trade, ensuring that economic growth does not come at the expense of the environment. Example, the WTO encourages its members to adapt environmentally friendly policies that do not unnecessarily restrict international trade, providing a forum for trade discussion. The WTO offers a forum for trade discussions among member countries where they can negotiate trade rules, exchange views, and discuss issues related to trade policy and practice. Example: the annual meetings of the WTO provide an opportunity for countries to engage in multilateral discussions on global trade issues such as agriculture, trade in goods and services. 10th, handling trade related issues in agriculture, textiles, and other sectors. The WTO works to resolve complex trade issues related to agriculture, textiles, and other key sectors. For example, it addresses issues such as subsidies in agriculture and restrictions in textile trade, which often affect developing countries. Example: the Agreement on Agriculture (AOA) focuses on reducing subsidies and trade distorting measures in agriculture, especially in rich countries. Let's summarize the whole WTO functions. Trade negotiations facilitate negotiations among member countries to reduce trade barriers and improve trade relations. Administering agreements ensures compliance with global trade agreements like GATT, TRIPS, and GATS. Dispute settlement provides a mechanism for resolving trade disputes between member countries to avoid trade wars. Trade policy review monitors and reviews the trade policies of member countries to ensure transparency and compliance. Technical assistance and capacity building provides support to developing countries to help them implement trade agreements effectively. Fair trade barrier reduction promotes a fair trade by reducing tariffs, subsidies, and other trade barriers. Regulating trade in services oversees the liberalization of services trade through agreements like GATS. Sustainable development encourages the balancing of trade expansion and environmental protection. Forum for trade discussions acts as a platform for countries to discuss and resolve global trade issues and negotiate new agreements. Sector specific issue resolution addresses sector specific trade concerns such as agriculture, textiles, and intellectual property. In conclusion, the WTO plays a central role in regulating global trade, resolving disputes, and promoting free and fair trade across the world. By providing a rule based system and a forum for negotiation, it helps create stability and predictability in international trade relations, contributing to global economic growth and development. With this, I end this part of the video. Hope this has helped you. These are just 4 or 5 questions that we have covered in 1 hour. There are many more coming, almost another 10 or 12 videos of an hour each. So continue listening. Do consider sharing if you got benefited from this video. Thank you very much. Take care. Bye bye.